Bitcoin just crashed to $82,000, a 7-month low. In 24 hours, $2 billion in leveraged positions were liquidated, over 390,000 traders wiped out. Then, overnight, Bitcoin rebounded to $88,000. Think about that for a second. A 35% crash from its October peak of $126,000. The largest single liquidation? $37 million. Gone, in one trade, on one exchange. Yet within 48 hours, the price recovered $6,000. What glitch in the system allowed this to happen? And more importantly, who profited while retail traders got destroyed? But before we reveal the mechanism behind this liquidation cascade, you need to understand what just happened in November 2025. Because this wasn't just a Bitcoin crash. This was institutional capitulation on a scale we haven't seen since 2022. November 2025 will go down as one of the most brutal months in crypto history. Bitcoin dropped 21%, its steepest decline since June 2022, but the real carnage wasn't in the price. It was in the ETFs. BlackRock's IBIT, the world's largest Bitcoin ETF, saw record outflows of over $2 billion in November alone. That's 71% of all Bitcoin ETF redemptions across the entire US market. Total Bitcoin ETF outflows? $3.79 billion. Ethereum ETFs? $1.79 billion in outflows. On November 21st, the day Bitcoin crashed to $82,000, a single 24-hour period saw $1.91 billion in liquidations. Long positions, traders betting Bitcoin would go up, accounted for $1.78 billion of that total. Bitcoin alone? $960 million liquidated. Ethereum? $403 million. But here's what they're not telling you. This wasn't retail panic selling. This was leveraged institutional traders getting force liquidated by exchanges. And when the dust settled, Bitcoin rebounded $6,000 in less than 2 days. How? To understand the rebound, you need to understand how crypto liquidations work, and it's brutal. When you trade with leverage, you're borrowing money from an exchange to amplify your position. Let's say you have $100. With 10 times leverage, you control a $1,000 position. If Bitcoin goes up 5%, you make 50% profit on paper. But if Bitcoin drops 10%, your $100 is gone. And the exchange force closes your position to protect itself. That's liquidation. On November 21st, Bitcoin dropped from $92,000 to $82,000 in hours. Traders using 20 times leverage were wiped out instantly. Those using 10 times leverage also liquidated. Even traders using 5 times leverage got hit. But here's the mechanism they don't want you to see. Liquidations create a cascade effect. When one trader gets liquidated, their position is sold at market price. That selling pressure pushes Bitcoin lower, which triggers more liquidations, which creates more selling pressure. Exchanges call this a liquidation cascade. Wall Street calls it forced deleveraging. But the technical term? It's a hunt. Whales, large holders of Bitcoin, know exactly where liquidation prices are clustered. They sell massive amounts to trigger those liquidations, scooping up Bitcoin at lower prices, then watch the price rebound. One Reddit user explained it perfectly. A whale sells 360 Bitcoin at market price. The price drops from $100,000 to $97,000 due to slippage. Stop-loss orders trigger. Leveraged traders get liquidated. Panic selling kicks in. Then, the whale buys back the same amount of Bitcoin at $97,000. Same holdings, lower cost basis, pure profit. November 21st? That was the hunt. So why did Bitcoin rebound to $88,000 overnight? 2 words: Federal Reserve. On November 23rd, Fed officials made dovish comments signaling support for a December rate cut. Suddenly, the odds of a 25 basis point cut at the Fed's December meeting shot up to 77%, up from just 41% the week before. By November 24th, those odds hit 80%. Lower interest rates mean cheaper money. Cheaper money means more liquidity. More liquidity means risk assets like Bitcoin become attractive again. Institutional buyers who had been sitting on the sidelines? They started buying. BlackRock SIBIT alone recorded $27.79 billion in trading volume last week. That's nearly 70% of all US Bitcoin ETF volume. On Friday, November 22nd, Bitcoin ETFs saw $238 million in inflows, breaking an 8-day streak of redemptions. But here is the chart that changes everything. Bitcoin Zest trading volume hit $40 billion last week. That's not retail. That's institutional capitulation. High volume during sharp price declines historically signals forced selling by large holders who bought at higher prices. When institutions throw in the towel, that's when bottoms form. Analysts at Swissblock noted that selling pressure has eased and the worst of the capitulation is likely behind us. They said markets often see a second wave of selling, usually weaker than the first. If Bitcoin holds above its previous lows, it becomes one of the strongest signals that the bottom has formed. Citi analyst Alex Saunders pointed out that $80,000 is a critical level because it's just close to the average purchase price of ETL Bitcoin. If Bitcoin stays above that level, ETF holders avoid being underwater. If it breaks below, that's when real panic begins. So here's the question you need to ask yourself. Was November 21st saying to crash? Or was it the biggest wealth transfer event of 2025? Because while retail traders lost $2 billion in 24 hours, someone made that money. Whales bought Bitcoin at $82,000. Institutions loaded up when the fear and greed index hit 10, extreme fear, for 3 straight days. And by November 24th, Bitcoin was back at $88,000. The system didn't glitch. It worked exactly as designed. Liquidations flushed out over-leveraged traders. Institutions capitulated. Whales accumulated. And now, with Fed rate cuts on the table, Bitcoin is positioning for its next leg up. Analysts are watching 2 key levels. $85,000 to $88,000 is the current consolidation zone. If Bitcoin holds this range, the recovery thesis remains intact. But if it breaks below $80,000, that's when the second wave of selling begins. And if that happens, the next stop is $75,000 to $78,000. Goldman Sachs and Morgan Stanley are both predicting a 10 to 20% decline in equities over the next 1 to 2 years. Bitcoin? It's already down 35% from its peak. If the Fed cuts rates in December, Bitcoin could reclaim $90,000 and push toward $100,000 by year-end. But if the Fed holds rates steady, $75,000 is back on the table. $2 billion liquidated. $88,000 rebound. Institutional capitulation. Fed rate cuts. The biggest hunt of 2025. Are you watching the show, or are you part of the liquidation? What do you think? Drop your answer in the comments below.